The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 10th. Fantastic Friday edition of today's Trader's Edge. I'm host Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we do everything we can to have an extraordinary weekend. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I, we make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to throw at us. Today, we'll go take a look at the circumstances of the Bulls and the Bears. We'll go see what they're throwing at us, what their message is, and I'm absolutely grateful for your presence here today. Now, I'm here to serve you. That means you can pick up that phone, dial on it at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. This is Fabulous Friday. It is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trade up 218 points. She's trading out at 17,766. S&P is up 26 points at 2,077. NASDAQ Composite up 72 points at 49.94. Russell 2000 up 15 points at 12.49. The DAX finished its session up 319 points. It closed at 11,315. The FTSE up 92 points. It closed at 66.73. We've got gold flat right now, trading out 11.58. Silver's up 10 pennies. She's trading at 15.47. Natural gas up 7 cents this morning or this afternoon. And a number of stocks on the move to the upside: Regenerate Pharmaceuticals, AutoZone, Google, Priceline, Chipotle, each up over $11 as we speak right now. Netflix up about $10, Amazon up about $9. To the downside, leading the charge, down by $12. Biogen, Helen of Troy, down about with volume, down with about 10% off $9 and change. Barracuda Networks off 19%. That's off $7. Zillow down $5. But it's really all about, I've got my rally cap. I've got my rally cap right here. We're very close to being able to pull the trigger on Bouncer Rally. If this, and hopefully it occurs during the show out here. In order for that to occur, let me do this out here. So I would really be wearing the cap this way, but we can turn it around to rally cap if we get that message out here. And what I'm really referring to, a couple of things. One, let me put this chart up on my screen. Let's do this. Here is the S&P futures contract. Here's the 30-minute charts out. Well, let me do this first. Let me do this. Let me back up just for a moment. Let's put on, let me grab the ES Mini 30-minute chart out here. I think I still have this all labeled up. If we take a look at yesterday's action, here's what we know about yesterday. And the 30-minute chart is something that you and I are going to focus in on, well, for a little bit out here. We will focus more on it if we actually get that rally signal. If we take a look at yesterday's action, we had that nice low that took place at about 3 o'clock in the afternoon. That was on Friday. That was on Wednesday afternoon. Found support at that magical 2037 level out there. Goes ahead, makes a nice move up overnight. In fact, makes a move up into about the 10 o'clock time frame. That was yesterday morning. It does that, makes that nice seventh wave move to the upside, labeled as letter G on my chart out here. What's it do after that? After that, which it normally does, because that's where things can get stretched and they can snap back. That's why I posted Inside the Tiger's Den yesterday, or I gave those figures to you. I believe I gave them to you during the show, and I said, look, if price closes above, and that was at that candle session I gave you, I said if it closes above 2068, extremely bullish. In fact, that's when you'd put the rally cap on. If it doesn't, closing below 2073 would be a problem. What happened last night? Price goes and moves down. Well, it did all during the day yesterday. And then as soon as the futures contract opened, it's closed for 45 minutes. As soon as the futures contract opened back up, it was back off to the races. Wide-ranging bar. That took place during a 30-minute session last night. Pretty difficult to have caught that move unless you were absolutely right in front of your screen out here. The real move came inside the NQ contract. But here's the point. If we take a look at where we're at inside the market today, you can see another seventh wave move to the upside. That took place at 12 noon out here. It was confirmed at 12:30, actually. And so at this stage of the game, it is that high that if it gets taken out, that's when we can absolutely put our rally cap back on. If not, then it's not game over for the Bears. Prices can push back down just as they have the last couple of days out here, and then you've got to wait till Sunday. And that's really just coming from the 30-minute time frame chart out there. As an example as to why I'm having you or why we are paying attention to that, let me come back here to the 30-minute chart. Let's travel back in time. Good. Actually, I have it set up. How about that? If we go back to the last significant low, there's others we can look at, but if we go back to the last significant low out here, last time we had any kind of scary bottom that was put in, I would say that scary bottom really came back during the Ebola scare. What else we had going on there was we had Russia shooting airliners out of the sky. There was just simply plenty of scary things that were going on. What's scary that's going on in today's world? Well, you still got all these different wars and issues, but now we've got the whole Greece issue, which is just putting additional scare into the market. I won't use the word fear, because I'm not about trying to sell fear. It's really about being able to buy fear more than sell fear. And so and you've got the China scary issue going on. But if we take a look at just the way that these wave patterns here work, at least the way that Stevie's been able to identify when you can confirm a change in shift out here. If you go back to the low back here in October of 2014, what you'll see a number of different color-coded seventh wave. You'll see a move to 8 waves, meaning letters H. That way I know that we've taken out a previous high. Just a real easy signal for me so that I don't have to sit there and count and wonder, did we take out that high or not out there? In any event, once you start to take out those seventh wave moves to the upside, and the first color that you're looking at on my screen is the red color out here. That didn't take place until really October 20th. Remember, the move off the low was October 16th. But boy, once we started to first take out that first seventh wave to the upside, it just continued and continued and continued. I don't have this whole thing out here labeled all the way into infinitum. But just simply, it's a very simple, useful tool for us to take a look at. In fact, on the way down back here, you'll see the same type of maneuvering coming back off of a high. It looks like that was around 4:30 in the morning on October the 9th. And that was when the next run really began to the downside. You'll see those seventh wave moves get taken out to the downside. When they start to recycle, it's something that you just absolutely have to respect out there. Is it going to work all the time? Yeah, it's going to work pretty much darn near all the time. And that's why you and I were focused on what's going on inside the markets, because we've got unanimity. What is something? If we take a look at, here's where we'll come back to this 30-minute chart out here. We'll take a look at this. With regard to the ES minis at the top, you can see 7 waves to the upside. On the ES mini, the price that you're looking at is any close above 2072.50. That'll start a recycle. So if we see that today, what you'll want to do is you'll want to go ahead and take out of your drawer. You want to take your cap and you want to put it in rally mode out here, because that is in fact what the market would be telling you. If you are wondering whether or not the bottom is inside the ES mini, if we see that high get taken out, rally cap it is. In the case of the NQ, the high is going to be 4418.50. If you go ahead and you take that out, rally cap it is that you're going to want to. In fact, if you're going to go into the weekend short, I would just simply suggest caution. If you are one that believes in patterns and how they just simply repeat on and on again, go ahead and use that as one of the patterns out there. You'll see that when we take a look at the Dow futures, it's on its 30-minute chart, and we take a look at the Russell 2000 futures contract, that's the bottom panel of my screen out there, you'll see we've got these seventh waves. So the markets have been working in unison on the way up. They will work in unison on the way down, and they will recycle if they're able to take out their highs out there. In the case of the Dow, the number to be paying attention to, this is the Dow futures. Well, I would do that if it would give it to me. 17,697. Any move above that, and then you've got the rally cap. On the other hand, what we do know is the market's really up against some pretty significant resistance. In the past, these seventh waves have been a great place to go ahead and understand where these sellers are camping out, or if you wanted to go short from an intraday standpoint. So that's what's going on as we take a look at the markets right now, what it is that you want to be paying attention to throughout the day. And that way, as you go into the 4 o'clock time frame, if these highs get taken out, those of you that are short, maybe you'll rethink that strategy, because if those highs get taken out, one part of your strategy is going to be thus. And thus is this, that you will have the New York Stock Exchange, which, as we can see right now, left panel of Stevie's screen out here, you've got that price oscillator above zero. And that is the green horizontal line going on across my screen. If we go ahead and blow this chart up here, you're going to see that prices went to lower lows. That's the upper portion of my screen. And it did that with a bullish divergent pattern. Well, now that the New York Stock Exchange oscillator is up above zero, that is all that you need to know that says that bulls now have taken control of the wider swath of the market. This chart is most important when it comes to the end of the day. But I can't be with you at the end of the day. But what we can say is, hey, you know where price is at right now, 10,834. Of course, this is based upon net advancing, net declining issues. And that can shift around. But nonetheless, if the market finishes up here higher, the price oscillator, I can most assuredly promise you that it'll be above the zero level. And it'll tell you, and what it is telling you, is that sellers have absolutely lost control of the market. And just as we have had the market gap down the last 2 Sundays, maybe the anticipation would be the market would gap up in a big way. In fact, if you go back to now, the other aspect about the New York Stock Exchange, and I'm just trying to be somewhat consistent to put all this together for you to make sure that you are paying attention to the patterns that I'm just simply sharing with you. I'm not giving you my opinion. I'm only giving you my opinion on what it is that I see from a pattern standpoint. I'm really just trying to stay as objective as possible. And one of those objective analysis of the New York Stock Exchange would be this. Do I want to do it here? Do I want to just go to, I guess I have to do it here. I can just turn some of this stuff off. So let me do that. Let me kind of give you, let me just simply give you a clean chart to look at. Let's turn this off. Let's turn that. Okay, so now we've got a clean chart here for the New York Stock Exchange. Are you a person that believes in H.M. Gartley? Do you believe in the Gartley buy and Gartley sell patterns out there? Is that something that you believe would give you a competitive advantage? If your answer is yes, then stay tuned as we come back from this next segment. This is Steve Rhodes with TFNN, and we're going to go find that Gartley buy pattern in the New York Stock Exchange. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. S&P up 23, composite up 66, and she could be a rock star. That Janet Yellen, she could be a rock star. Who is handling her PR for her? She could be coming to us from the Rock and Roll Hall of Fame, probably just down the street from where she's at in downtown Cleveland, Ohio. Out there, if it were me, I'd be coming to you. I'd be coming to you right from that Rock and Roll Hall of Fame out there. Now, back to the markets out here, back to the Gartley buy pattern. Now, Gartley patterns, if you believe in them, which I believe that you should believe in them, very cool patterns. They're opportunities to get you into a trade that you missed out on, into a trade that has been trending. And in this case right now, if we take a look at those lows here from October in 2014, remember we went back, we took a look at those lows, just taking a look at the NQ. I put up the continuous contract on my screen out there just so I could go back and get all the data out there. But if we take a look at that, this is really the second Gartley that's formed here within the past within the past month. And a Gartley buy pattern is what it is. If we take a look at it, in order to have a Gartley buy pattern, the requirement is to have an A to B equals CD to the downside. The first time that one of those showed up was right here. That was off of this high that took place on May 21st, down to the low out here on June 1st, and back up to this little retracement on June 3rd. We had your 1-to-1 A to B equals CD to the downside. That took place right here on the trading trading day of June the 9th. You got a confirmation on that very next trading session on June 10th. Now, remember, every Gartley pattern has 5 potential outcomes out here. Let's go see what this last one did. And those 5 outcomes being the 0.382, the 0.618, the 0.786, 100% move of a move. Whoops, it looks like I missed it just by a penny or two, so let's go ahead and put that back in here. Give me a moment. And 4th outcome is that move of a move. 5th outcome is it creates new A to B equals CD pattern. The last time that we saw that Gartley pattern play out, we got to objective number 3, the 0.786 retracement. That actual price projection was 11,175. We saw the New York Stock Exchange get up to 11,092. So close enough, not exact. Oh, wait, I got to get on the right. Got up to 11,170 versus 11,175. Hey, not too shabby when you're dealing with 11,000 out there. Now, there is a second Gartley buy pattern that completed a few days ago. If we go take a look at it, that Gartley buy pattern looks like this. We're going to start with the same A point, the same swing point, which is the high out here from May 21st. Now, we're going to come and take our B point of the A to B equals CD to the downside, June 9th. And then we come all the way back up here to the high on June 22nd. What we've seen take place just a few trading sessions ago is a 1 to a little bit greater than 1 to 1.272 A to B equals CD. Remember, we're not like Barbosa in Pirates of the Caribbean. We're just using these expansions of the 1 to 1 A to B equals CD as a guideline. And guideline it is. And we got that nice little hammer candle that took place 3 days ago. This was on July 8th. Nice little hammer candle inside the New York Stock Exchange. It got tested a couple of days ago, back on July 8th. Didn't get tested yesterday, but that hammer candle held today. You've actually got a nice big old bullish engulfing candle out here. So you've got 2 reversals inside the New York Stock Exchange. You have a confirmed, not just once, but confirmed twice, Gartley buy pattern. So now what we've got to do is go take a look at our 5 different options, 5 different potential retracements inside of the New York Stock Exchange. Now we're just simply going back in that May 21st high all the way down to the low that came in a couple of days ago. You can see that retracement level number 1 has been approached, has been hit, looks like hit to the spot, so to speak. That number, by the way, is 10,863.95. The actual intra-session high, 10,862. So level 1 has been attained when we take a look at the 5 possible outcomes of any kind of Gartley pattern. Now, if the New York Stock Exchange price oscillator closes above 0, pretty good chance that what you're going to see is outcome number 2. What's outcome number 2 going to take you to? Well, that's going to take you to 11,013, your 0.618 retracement. It's also going to take you back to the level of where we have an open gap. Hey, if you're a person that used to say the New York Stock Exchange gapped up, and that means that has to get filled, the market's got to pull back. Well, gosh darn, if you're one of those people, I sure hope you would also say that we've got this gap down, and that too has to get filled. So the New York Stock Exchange, you should anticipate, if you're one that says that it's going to at least get to objective number 2, which is that 11,013 area. And if we've got a nice strong move, if we start to see these on this 30-minute basis, these G's recycle, you can expect to move to 11,119, and then that 100% move of a move all the way back to its highs, 11,255. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 203. S&P is up 24 points out there. Did I mention to you that the first objective in any Gartley pattern out there, which we took a look at inside the New York Stock Exchange, that it hit it with a wide-ranging bar? That's today's bar. If, in fact, the market closes somewhere near these levels here, what it's also communicating to you is it's going to go up. It's going to close that gap. It's going to get to that 0.618 retracement. So, look, if you're short, you can stay short. Just anticipate that that's what the market is going to do out there. If we take a look at the summation index here for the NASDAQ composite, remember, it's the NASDAQ composite that I really want us to pay attention to at the end of the day. You know, can it get above that level that says, hey, things are starting to now recycle to the upside, just as they did back in October 2014 out here? And if we take a look at it, stop doing that to me. That number again, I'll just give it to you. Write it down on a pad of paper. 4418.50. It's got to get above 44.1850. Now, if it gets above 44.1850, does it towards the end of the session today, maybe we see some kind of sphincter muscle short covering rally as we go into today's closeout here. That could do it. What that will likely do is that'll go ahead and push the price oscillator of the cash industry, the NASDAQ composite, up above zero. It's the only one that is below zero right now. And that has to be respected because as long as it remains below zero, it does say that sellers are in control. So we've got a little bit of a divergent market between the New York Stock Exchange, which is in bullish mode, the Dow, which is in bullish mode. It did finish in bullish mode yesterday as well. So we've got day two out there. And in this case here, if we get a recycling, we get above that NQ, it stays above that level, we're going to likely get the composite above zero as well. Now, is that important? Well, it is important because if it does close above zero, then what has happened in the past is likely to repeat again. If we take a look at 2 days ago, that price oscillator moved right down to the trampoline of that minus 67 area. That's the dashed yellow line on my screen. The last times that the composite visited that level, well, you've got back in January 2015. Now, the important thing for you to pay attention to here on Stevie's screen is that once price moved off that trampoline, it went where? It went back to the highs. In fact, it went back to take out the highs back in January. Go back a little bit further, back in October of 2014, what did price do? It got back to the highs. In fact, it went on to make new highs out here. In the NASDAQ composite, we can't say new all-time highs out there, but it did go back and make new highs. What happened when we saw that price oscillator get down to that level back in July of 2014? The same thing. Therefore, pretty darn good chance if we see that oscillator get above zero, hey, even if we don't, let's face it, you come in Sunday night, the market opens up, they like whatever's going on over in China, they like whatever's going on in Greece, or whatever it is that the market likes, you see it gap up, you're going back up to the highs. In fact, you're going to go ahead, not you, but the market will go ahead and make new highs this summer. I've been sharing that belief and that thought with you for I've been consistent, have I not? For the last several weeks out here, and I don't. There's nothing. I mean, just the mere fact that we got a Gartley buy pattern inside the New York Stock Exchange, inside the Dow as well, should at least make you go ahead and open up yourself to that as one of the possibilities inside of the marketplace. We're seeing a nice move here in the VIX today. Let's go take a look at it from this standpoint. Let's take a look at the cash industry now at 1722, about a minus 13% move to the downside. If we finish there, that actually you get minus 10% move after a couple days ago where we had a plus 10%, greater than plus 10%. In fact, it was like, what, 32% or something like that. Oftentimes, that is an initiation move off of the bottom out here. Oh, yeah, and the DAX. The DAX, I was speaking with one of our denners earlier today, and we take a look at the DAX. You want to speak about taking a look at being able to find a place to buy into a trend that one missed. Just go over and take a look at the DAX in Germany out here, because as we take a look at it, as soon as Stevie can get it on his screen out here, should have kept everything turned off. So let's go ahead and do that anyways. Well, you've got the A to B equals CD to the downside. Let's not turn it off out here. Let's just take a look at it. If you take a look at the DAX coming off of its lows back here in October as well, this is the first A to B equals CD to the downside. Forget the U.S. market. It's the DAX that you want to be invested in out here, because that's one. Because if this turns it into outcome number 5 and A to B equals CD to the upside, it is a doozy. A doozy meaning going from 8,500 to about 12,400 out there. That is your A to B level inside of the DAX. So it completed an A to B equals CD to the downside. Nice bullish reversal signals over the course of the last couple of days. She's back to her high, so maybe take those out as well out there. That was one large move to the upside. I believe that's much larger percentage-wise, much larger than what we've seen inside the U.S. market. So maybe that's someplace that you want to go ahead and consider. If we take a look at, so that was taking a look at the VIX index as well. If we look at, just to update you, gold priced in dollars and gold priced in euros. In this chart here, the upper panel of my screen is gold priced in U.S. dollars. What do we know about it? Well, what we know about it is it has held the trend line coming off of the low back here in November of 2014, and then once again hitting that in March of 2015. Price just really dancing around those levels, not doing moving a whole lot. Now, that's its trend line. When that trend line gets broken, should it get broken out here, then you can expect gold to get back down to the lows of November 2014, perhaps even lower out there. You got to take it one. That's the target, and then we see what happens when price gets down into that target area. With regard to what's been going on here inside gold with gold priced in euros, if ever there was a time for gold to have taken off, priced in euros, you would have thought that it would have been during these past couple of weeks out here. But what has happened during this past couple of weeks is there's just been churning around the 1,053 level. It doesn't really matter what the euro's been doing. It's just been churning around this 1,053 level. I think that churning is more so just trying to crack the ice out there and crack the ice for gold to go ahead and make its next move down, at least priced in euros. Will it do the same priced in dollars out here? I'm starting to, I don't have conviction, or we don't have conviction, or I should say the commercial traders, at least through Monday's report. We'll get another report today at about 3:31 in the afternoon out here. They haven't had any conviction really one side or the other for the last couple of weeks out there, which has been perplexing as well. Silver, a different story, but in the case of gold is going to be the more dominant pressure cooker with regard to the direction of price. And at this stage here, I can't get a great read on what gold wants to do. My inclination in taking a look at this chart here, and then just simply coming back and taking a look at what gold and euros hasn't done out here, says next leg is lower. That means it could mean just simply a test of the lows out here back in November, and then a test of this old support level that was broken at 1,000 euros per ounce in gold. So that is my thinking as we speak right now. With regard to longer-term trends out there, if we take a look at this chart, I began working on this chart here yesterday live on the air. If we just take a look at it, something for you to consider. Look, I think that using the term that we're in a bear market is a absolute misnomer out here, because nothing could be further from the case if we just simply utilize the trend as our friend out here. And if we take a look at the trend line, those are the red diagonal lines on my screen. The top panel of my chart is the S&P 500. The panel below that is the Dow. The panel below that is the NASDAQ Composite. And panel number 4 at the bottom, that's the New York Stock Exchange. If you just simply draw a trend line, a very simple trend line, something easy to do. You do not need to be a technician, but if you want to understand the trend, go all the way back to October in 2011. That is a significant low out there. From there, you can go ahead and draw your trend line. You can see inside the S&P 500, price has not made it down to test that trend. Last time we were down there was October 2014. Go take a look at the Dow. The Dow didn't make it down there this time around either. Take a look at the NASDAQ Composite. Sheesh, that's so far away from being able to get down to that trend line. Now, what the blue squiggly line is that's on my screen, that's the equivalent of a 200-day exponential moving average. It's the 40-week moving average, right? 40 weeks times 5, 40 times 5 is 200, gets us to the equivalent of a 200-day exponential moving average out there. And the bottom portion of my chart did hit the trend line. And that was the New York Stock Exchange. And we already took a look at the New York Stock Exchange. We took a look at the A to B equals CD to the downside. We took a look at the Gartley buy. We took a look at where its price oscillator is, which is above zero, that says that the bulls are back in control of that. And so that's it. Do I have a chart? The question is, do I have a chart of the advanced decline line? I do have a chart of the advanced decline line. I don't have it updated with regard to yesterday's data or today's data, but post the question in as far as what it was that you would be looking for, because the advanced decline data can be used in a number of different ways out there. And many people only use it in one single way, and that's too bad because it has so much more relevance to use it in multiple ways. But what I want you to know about this chart is if ever you were going to try to find a place where your back was up against the wall and you were going to go ahead and buy and the general market was going to deliver a message to you, Well, the New York Stock Exchange gave it to you. Well, it gave it to you here. It also gave it to you on this chart because you know that we've been following this chart for the New York Stock Exchange. This is also the weekly chart for the NYSE. And we can see that the green horizontal lines going across my screen, those are horizontal trading range boundary lines, which have held as we speak. What does that say? That says New York Stock Exchange goes back up and it tests the highs out there, may take out the highs and then make a run for the 11,572 area. I'm not going to discount that as a possible thing that it won't do. But getting back up to its highs, certainly back up to that gap, is really what it's all about out there. I see a question with regard to Apple. If we take a look at Apple, we looked at this in depth yesterday with Garo in California. You've got Apple at 123.11. One of the points that I made to Garo when we took a look at it, because it's always good to take a look at charts on three perspectives. One perspective being one level up from what it is that you're looking at. No idea what the heck that is on my screen. But as we take a look at Apple, the point that we made, because we were looking at a swing point out here, was that Apple was breaking or was going to at least test the swing point that was during that week of March 9th out there, because price had moved into it on a daily basis with volume. And yesterday it went ahead and tested it, broke through it, and went down to price point here of what, 119.22 out there. And what we also said was Apple did not have enough volume this week to go ahead and bust down through that same swing point on the weekly basis, which was 326 million. You've done 257 million. I don't think there's going to be another 66 million shares inside Apple today. So Apple here has defended that swing point from the week that began March 9th out there. And what Apple really needs to do today is just simply close back above 123.79 or 123.09 in order to have just simply done nothing more than test the bottom of its TAS market profile low out there. I don't know where it's going to finish, but it just doesn't have enough volume on the weekly basis to go ahead and bust things to the downside out there. So that covers really the longer term. We've taken a look at some shorter term scenarios. We take a look at the VIX index, what it's doing out there. I think we've covered gold. Oh, hey, shoot. How the heck did I miss this? How did I not show this to you? Well, you've already seen it. You already know that what a move is going on inside the Euro-Japanese yen currency pair out here. Now, this is a weekly chart that we're looking at. Let's take a look at the daily time frame. Big move to the upside. So for the bears or the sellers out there, boy, you talk about having some wind right dead smack in your face out here from a liquidity standpoint. It is that Euro-Japanese yen currency pair, which tracks the U.S. stock market better than any other currency pair out there. So you're not getting a negative message from it. Again, I think it all boils down to, has the high for the day been put in? If the sellers really are out there, the answer to that is yes. Absolutely, positively yes. If we get above those levels that we took a look at, you can just simply go ahead and put your rally cap on. Probably ought to expect a short covering rally going into the close out there. But if those highs don't get taken out, it's almost a little bit of a toss-up out there as to what takes place. We really won't know until Sunday evening out here. So you've got the euro. Take a look at the euro just versus the U.S. dollar. It's trying to get back inside its trend out here. Remember, we take a look at these trend lines. In this case here, it's diagonal trend lines. It's a channel line, and price had broken through. It had gotten out. It tried to get back in, and it tried to get back in this morning. But take a look. It ran into resistance. Don't worry about the TAS boxes out here that are on my screen. Just take a look at those diagonal lines, the yellow diagonal line on my screen. We can see that price, boom, right up into it. And it found resistance out there. It is trying to get back inside that trend, inside that rising trend out there, but it is struggling to do so. Sellers still in control of the euro versus the U.S. dollar. Let's take a look at light sweet crude out here, 52.37. A lot of folks trying to buy this next bottom out here, and at this stage of the game, the key is going to be the price point of 52.41. And you're trading at 52.39. You close below 52.41 today. Your buy point is likely 48.71, a test of that low from March 18th. This is Steve Rhodes with TFNN. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. One of our denners, one of our expert denners, posted a chart in the Tiger's Den. I've got it up on my screen here right now. Gold priced in euros on the weekly chart. And one of the areas that he's looking at is this 1042 area. So you and I, we looked at the, I think it was 1035 perhaps on the on the daily chart, just the churning that was going on along that line. If we take a look at the weekly chart out here, and we notice gold priced in euros, we go all the way down from the bottom that came in back on December, the week that began December 30th, 2013. Gold was priced in euros at 859 euros per ounce. Made a recent high out here back in January 2015 at 1,155 euros. We can see from low to high that the 1042 mark is your 0.382 retracement level. And so the conclusion drawn was you get a close below that area here, this 1042, you're at 1040.70 right now. So, you know, a couple bucks isn't going to make it. But when we talk about that churning that we're taking a look at on that daily chart, if we do see a close below here, it says at price, the natural thing would be for it to pull back to the 0.786 retracement area. That's around 972. That's lower than that 1,000 euro area, but it's really right within that range. What we can also notice is that's where the breakout began. You can see on the weekly chart, it's even more defined than it is, I suppose, on the daily chart, which began the week of January 5th out here. And the bottom of that was 989.70. So I would say any break of this 1,042 area, gold priced in euros, expect it to pull back into that 972 to 989 level. Does not look like on this during this hour here we're going to be able to put our rally caps back on. And I suspect if it takes place during the next hour, during David White's show, that he is not going to go ahead and put that rally cap, because word has it he's got a bet with Andy Heck that may come to fruition this week. But whereas I would like to use this as a rally cap, they're going to use something that is quite more disgusting for their so-called rally or not rally caps out there. But I'll let him explain that to you. So as we close out the show today, Dow's up 190, S&P's up 22, price oscillator summation index still above zero in both the Dow as well as the New York Stock Exchange. You've got Gartley buy patterns. You've got the VIX index that is falling, not below its 50-day exponential moving average, but down by 13% today. If it finishes the day at a negative 10%, that with everything else that's going on suggests that that gives us an initiation move to the upside. Inside the market, it says the summertime rally that maybe many don't want to see. I don't know why, but many don't want to see will, in fact, be underway. Key level inside the VIX, confirmation of that summertime rally is going to be 1501 as we speak right now. I don't anticipate that that's going to take place inside the market, but you get below that 50-day exponential moving average, it's truly off to the races out there. We took a look at long-term trends. I'm not really sure what else it is that I can provide to you, so maybe I should just sing a tune. No, there was a question here. I think there was a question that I didn't get to. Did I get? Not. Oh, okay. Look at the yen. That's what it was. So if we go take a look at the U.S. dollar, Japanese yen, a big move today. We've seen the big moves over the course of the past couple of days out here. I would say at this stage, if you're trading it, I would look at the trend line out here. And the trend line, this little short-term trend line inside of the Japanese yen. If you're looking for, whether this is going to break out or not, I would just take a look at the declining tops that is still in place out here. And that would be coming and taking the look at the June 5th high, and then that little doji candle on June 24th, little doji shooting starish looking candle on July 2nd. And in fact, if you get the Japanese yen, the U.S. dollar currency to get above that area, then you've got a breakout. So folks, have a fantastic weekend, fantastic Friday. Stay tuned. Our man David White will be up next, and I look forward to seeing you Monday afternoon. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.